Hello, everybody, and welcome to Friday. What is today's date? I don't even know. What day is today? The 24th, July 24th. Oh my God, it's already the 24th of July. How the hell did this happen? I felt like this month just like flew by. Anybody else?
Mhm.
Yeah?
Yes, totally.
I don't know how this is happening, but it's happening, so okay. Well, welcome to our investor party today. We are going to be doing our market update with Emily Muiruri, and we are also going to be doing deal or no deal, where you guys get to ask questions about the opportunities you're working on, and we're going to talk about what to look for, different things to consider, and find out, is this a deal or no deal? So let's take a look at that and see what goes on. So if you have questions, come on and join the party at investorparty.com under events. You can go ahead and click on today's link if you're a member of Investor Party. If not, you can go ahead and ask on Facebook. Come on and join the party at investorparty.com. Okay, so Emily, my dear, how are you, honey bun?
Hi, how are you guys?
We're great now that we see your smiling face.
Oh, thank you. How's everything going?
Wonderful. Did you have a shot of tequila or a nap? Which one was it?
Not yet.
Holding
Holding on. I'm trying to hold the line.
You can do it, honey. I believe in you. I believe in you. So, what are we learning about today?
Oh, so just like last week, I just want to kind of give you guys an update on what's going on in the world of the economy and the stock market. So you guys are always up to date on what's going on. I always like to start off with the jobs claim. So if you guys recall, we've been holding that line of 1.3, 1.2. The jobs claims actually went up this week. The estimated number was 1.3, and we actually were at 1.4 versus last week where we were also at 1.3. So there's three numbers. There's the actual, there's what they had estimated, and then you compare to the previous week. So this week it was at 1.4. They had it estimated at 1.3, but we are at 1.4. So there's actually a little bit of a spike compared to the other weeks where it's been gradually declining, not by much, but it's been gradually declining. This is the first week that we're seeing a little bit of an uptick on the numbers. So it's at 1.4, but still it's at that level where it's been for for the last few weeks. So, again, we'll have to wait and see what happens with that. Obviously, Congress is in discussions about coming up with, another stimulus package for people that are unemployed. So those talks are in the works right now. But the 600 additional weekly benefits, I think, expire or end at the end of July. So they're hoping that they're going to have something in play by then. Whether that happens or not is yet to be determined, but clearly that will have an effect on how the market reacts to that. So we, next week is kind of like a wait and see, almost.
They end this week.
End up doing.
Sorry.
So yeah, and then on top of that, we're in the middle of earnings season. So all these companies are reporting their earnings, and we're starting to see now how the market is reacting to that as well. So where, last quarter's earnings, they all almost were getting like a little free pass where we kind of expected, okay, it's going to be bad. This quarter, they're not getting that same forgiveness. They're, investors are actually reacting to what these companies are reporting in terms of their numbers. So we're starting to see that reaction in the market. Existing home sales, I don't know if you guys, I'm sure you guys keep track of this because you guys are obviously in real estate, but existing home sales climbed in June from May. There was a 20% jump. It might sound like it's an enormous number, but let's not forget that we've, been indoors and homes we're not selling as much as they were in April and in March, April, and May. So that's why you see that huge spike. But the number that I'm more comparing it to is not the month over month, it's the year over year. So even though we were up 20% and we were at 4.7 million homes sold in June versus May, when you look at the year to year, last year, June, we were at 5.3 million homes sold. And this year we're at 4.7. So there's still an 11% drop in that number. And again, most of it has got to do with the fact that we were, we're scooped up in our houses. Nobody was planning on selling their house in the middle of a pandemic. So that could have an effect on that, but that's kind of like what you want to look for and to see whether those year-over-year numbers are either increasing or decreasing. But like we've always said in terms of real estate, the residential part of real estate seems to be doing well. It seems to be boosting. Homes are selling left and right. So, I don't know when we'll see the effect of the foreclosures once homeowners are not paying their mortgages after this forgiveness period. Whether that's going to be extended again, that's yet to be seen. So it's still something to keep an eye on. But for the most part, home sales seem to be doing quite well in the month of June. So that's kind of like what's going on. In the market this week, we've just kind of seen a little bit of a slowdown. On Monday, it looked as if we were going to continue on an uptrend, and then things kind of like shifted. So we've had a little bit of a sell-off the last 2 days. Market is still selling off even today. We're down. And again, it's not down as, that much. People's reaction to the market being down 1%, 2% nowadays is like huge. But we're going back to April, to February and May when we're dropping 7%, 8. That was enormous. But there's panic when the market just drops down 1%, and it's really not that that big of a deal. But everybody is just keeping an eye on the market. The moment the market's no longer going up, there's like this fear and panic. But this week is kind of slowed down a little bit. I really thought that we were going to have a little bit of an uptrend this week, but we're in the middle of earnings and all these companies are reporting, and everybody's kind of waiting to see what this stimulus bill will be once it gets passed by Congress. So I think that's also where there's that people are hesitant to jump in, and they want to kind of wait and see what happens with that. But overall, we're still bullish, we're still going up. So nothing has changed in terms of that trend until something else happens. We're still, inching up and up and up towards those highs that we were before the pandemic hit. So we'll kind of, keep an eye on that and see what's going on. So that's kind of like what's happening in overall. The tech sector. So last week, I kind of gave you guys a little bit of a preview of like the different sectors that we look at. We look at the Dow Jones, the S&P 500, we look at NASDAQ, and then we look at the small caps. The tech sector, which has been the leader throughout this whole recovery phase, really took a beating this week. So that's actually the one that's kind of lagging this week. So that's an indication that money is shifting from those tech stocks into something else. If you compare what the tech sector has done this week compared to what gold and silver has done this week, you can obviously start to see where the money is shifting to, because tech really has not performed well this week compared to other places like small caps, your commodities, your gold, your silvers, and all that kind of stuff. Even oil had a breakout this week. So you're starting to see that money start to shift around. So that's just something to keep an eye on. So if you're out there and you've been trading and riding that tech, high, it's time for, start to lock in those profits, adjust those positions, and, because we're starting to see a little bit of a slowdown in tech. And again, it could just be taking a breather, and this could continue again next week, but just something that we're noticing is that money is slowly shifting from tech into other sectors. So something to keep an eye on. So that's what I was looking today.
It's interesting you said that about gold and things shifting, which is interesting. I was looking today, and right now gold's at over 1900, 1907.
Yep.
Which, okay, so I bought mine at 1490 a year ago. I'm so excited right now. So if I look at that, it said 1907, right? Return over investment, 1907. Divide that by 1490. That's awesome. I made 128% return on my money.
That's it's funny. It's funny you just did that, because I was doing something on my computer last night, and my son was sitting next to me, and we were talking about this, and it must have come up in a conversation, and we're talking about, I think I was talking to Jake perhaps, and my son goes, so that tube of silver we got, can we go and trade it in and get some cash? And I go, no, baby, we're not getting rid of our silver coins just quite yet. We're holding on to them for just a little bit longer. So he was like, man, really not even one coin? I'm like, no, baby, we're not doing anything with it. But yeah, it's been a good week for silver and gold for any investors or holders of silver and gold. And gold is almost at that all-time high of where it was back in 2010. So 50, so it's not quite there yet. I think silver hit 50 back in 2010. We're sitting at like 20 or 22 right now. So silver's still got a little bit of a run to make, but gold's just been skyrocketing. So that's pretty, it's good to see that after gold has just been consolidating for years and years and years. It's good to see that spike in gold now.
It's really interesting. Now, there's something that, well, do you want to talk about it? Should this be discussion amongst everybody? I'll either shut up about it or I'll
even know what you're about to say. So I don't.
I mean, I'll take a group consensus. You guys want to talk about it a little bit? I can. You ready? Okay. Well, let's have some tea. Let's have some dish. I swear, there's no Kahlua. It's just pure vodka. Anyway, so let's talk. Why is gold working so well? Why is it so interesting? Well, there is a really fantastic author whose name is James Rickard. And by fantastic, I mean boring as hell, but smart. All right, so he's on Robert Kiyosaki's Power Team. If you haven't heard of him, you probably have heard him, you just didn't know you've heard of him. Brilliant mind, very, very, he's one of the guys that didn't get laid until he got married type people, right? Totally dull, but brilliant. He has a series of books out there, Road to Ruin, Case for Gold, Aftermath, which is probably one of the books I'd recommend everybody read right now in the world that we're in. It came out last June. It's Aftermath by James Rickard. Anyway, long story short, one of the things that I learned about gold was there are countries that have been trying to hoard gold so that we can actually get back on a gold standard, expecting a currency collapse worldwide. Now, in the book, you are hearing things that are, you'll hear terms like special drawing rights, universal income, SDRs is what they're called short for special drawing rights, and universal income. And if you actually pay attention to what's going on in the election right now, they've been mentioned several times in various platforms for these presidential candidates that are here. Both Biden and Trump have mentioned them in some way. Trump talks about it in ways of gold and talks about currency, whereas Biden's talking more about global economy and special drawing rights and universal income and crypto. So they're in there, you have to listen for it, but now that you hear it, now that you know it, you'll start hearing it. So special drawing rights means everybody is getting a certain amount, period. Special drawing rights means every country is going to have a certain amount of currency based on a commodity that is globally distributed amongst its population. And it's agreed upon that everyone's gonna have a certain amount of wealth. So it's like, it would be, for example, everyone using the US dollar, not just the United States. The problem is, the US dollar is not a currency that is going to be considered. That's why they're called SDRs, special drawing rights. Now, gold was being held down for the past, I wanna say decade, right, Emily?
Yeah, it's been about 10 years because 2010 was the last spike.
So when the global collapse fell and everybody had this awful experience of, their country's economies bottoming out and they weren't able to, they weren't solvent, there's all this issue. Well, when money goes down, it's an inverse reaction. When cash values go down, gold, real money, when fiat goes down, real money goes up. The value of real money goes up. And real money are things like precious metals because they've been money for 2,000 years. Okay, so they're not going anywhere and there's a finite amount of them. China was actually going around, the People's Bank of China was going around and they were buying other countries' stockpiles of gold as private institutions, private companies, only to find out after they would buy the surplus of gold from all these countries at low rates because it was being suppressed, only when it was discovered, and not that it was shared, when it was discovered that all of these private companies that were buying large amounts of gold around the world were actually owned by one country, it caused a big snafu. You can actually Google it. And China said, well, we couldn't afford to let everybody know we were buying this gold because it would have raised the price up and it wouldn't have been fair. Of course not, because now you have all of it. Now the price is up and it made them more wealthy, right? So they're not the only country that's been stockpiling, but they've been very aggressive at it. So is Russia, and so has the US. One of the reasons that they had this big thing with Hong Kong and the rights in Hong Kong, yes, the civil liberties and everything, that's very important. Also, mainland China was trying to get a lot of the stockpiles of Hong Kong's gold within their own private bank. So the People's Bank of China is a very interesting organization to follow. I'm not going to say anything more about that. It's just I've learned a lot since I started like researching the values of gold and currency and the dollar and global finance. It's been really interesting to find out. So Google it and let's have a conversation about it. But when you look at gold going up, you also look at how much a country is holding and where that goes with them. So Emily, how do you guys look at gold and the currency in the Forex market? How does that factor in there?
So gold, again, you're looking at it two ways. You're looking at it either as an investment and also as a way to hedge on currency. So you have the physical or you have the paper. But if you hold the physical, I don't know why people buy physical, but the reason I bought it, or the way I was educated on why you would buy the physical metals, is because you're using it as a currency hedge towards everything else that you hold in either US dollar or whatever currency that, whatever money that you use and circulate in other countries. So that's why most people have gold, is because it's a tradable instrument that's not a currency. Kind of like why people kind of went to Bitcoin, right? It's another way of just having a different type of currency that's not attached to the US dollar. So that's one reason that people own gold. The other reason people own gold and the paper asset is just because of that. Maybe they want to have both some physical asset, because with the physical asset, you really cannot monetize that. You cannot monetize anything that's physical. You're literally just holding it because it's a hedge against your currency and you're just looking for appreciation. When you hold the paper asset, you have options. You have other things that you can do with that. You can cash flow with it. You can, you can trade it. You can do all kinds of things with it. And it's not just like the actual gold itself. Like when you buy the actual commodity, when you buy gold and silver, that's one thing, but you can also trade gold miners. Like you don't have to go and trade or buy the paper asset of gold and silver. You can if you want to, but you can also trade the gold miners, right? Because the gold miners are attached to gold and silver and other metals and commodities. So when you're doing it on the digital aspect of it, you're doing it either as an investment so you can cash flow on the actual physical one that you own that you cannot cash flow on, or you're actually using it as a trading instrument. It's the same thing, right? So that's how we, when you're looking at gold, that's what you're looking at. In terms of in the Forex market is just currency pairing. So you're pairing one currency against the other, but it's still currency, right? The actual hedge towards towards currency is actually owning the physical metals, which are, of gold and silver, which are the two most main ones.
I just made you able to share your screen, Emily. What I'd like to see is can we look at the Forex market and see what currencies are highest at the moment in relation to what? Is there some way to look at that?
We can look at currency pairs, but again, I am not a Forex guru, so we can look at currency. So give me a second to pull up my trading platform, and we'll look at that, and then we can also look at gold and silver while we are doing that.
Go ahead, Jamie.
One quick second, let me log that in. We're going to look at some currency. So the main currency pairs really you're looking at the US dollar, obviously, but then you compare the US dollar to the pound, or the US dollar to the euro, or the Japanese yen, or the Swiss franc, and those kinds of things. So you're just literally comparing the strength of both currencies, and all you do is just trade trade against the other one, to, you know, depending on which one has the stronger, which currency is stronger that week. So you're just literally trading against two currencies. So I'm not sure what you're looking for or what I'm showing you, but
I just have an idea. I have an idea. I don't know if it's going to work, but I have an idea.
okay.
By the way, pop quiz, everybody. If you if the dollar were taken out of circulation, what currency do you think would be the next major currency in the world? Say it so Rebecca can hear you.
Where's my screen share? I can't see my screen share.
I said if China's got all the gold, then it'd be the yen, right?
We have one vote for China.
I vote for China.
You vote for China as well. Leanne votes for China. The answer is actually the Brazilian real, just because of the amount of currency that is out there. So it's based on population, how far it's spread. I thought that was really interesting to find out, but it's actually the Brazilian real. Okay, so what are we looking at here?
So this is just an example of a currency pair where you're comparing two currencies, right? So we're looking at the euro and the US dollar, which I believe this is the most traded currency pair out there. So this is, again, the euro and the US dollar. So when you're looking at this, you're looking at which one has more strength. So in this case here, the euro has more strength over the dollar today, because you're comparing the two currencies. If you look at the US dollar to the Canadian dollar, right? So when you trade Forex, this is all you're doing is you're pairing two currencies together, and you're trading them against each other, right? And all you're looking for is just a slight movements, which we call pip movements, and you're looking for them to, you know, to move in pips so that you can take advantage of the movement in that currency. You can also look at USD and the Japanese yen, or yen versus USD. Oops. Oh, wait.
It's IN, isn't it?
No. Hold on, I have to go look at my currency pairs now because I can't remember what it is, because I don't trade Forex that much. And I only trade the yen and the
That's okay. I'm enjoying watching you click buttons. I don't do that. This is not my forte, and I admit that. I go to people who know this when I do this. But most of the stuff I do is cold silver. I know a little bit about oil and real estate. So it's always fun for me.
So here's our little watch list. So you have let me get that paired up. So yeah, so we have, and I don't know, let's see, once again, that one. It's JPY. I was doing the actual, okay, I got it. It's JPY, USD JPY. Here we go. And now we can get that one done. So USD JPY, that's a Japanese yen.
JPY.
JPY, there we go. So here's that. So and this is what happens. So as the value of the dollar weakens, right? If the dollar weakens and then the other currencies strengthen, so then you pair them. You're literally just trading which one has more strength that particular day or that particular trade session or whatever it is. So you're literally comparing the two and just, you know, trading that. You also have the US dollar and the Canadian. We looked at that. You have the New Zealand dollar versus the US dollar. So those are the major currency pairs. But you can pair so many currencies against each other. But obviously the most traded one is that US dollar and euro, but they're quite many.
Can we check out the US dollar and
if you just want to look at the value of the dollar itself, you can look at the value of the dollar itself, and this is an ETF called UUP. So you can look at that and just kind of see what's been happening with the dollar itself, right, over time. And let's see here. Oh, give me this. Hold on, I closed up my little box here. So you can look at the actual dollar itself and kind of see what it's been doing on its own, like the actual value of the dollar, right? So as we inject more money and print more money, obviously over time, what happens to the currency of the dollar? It decreases in value, right? So that's kind of like what you've been seeing over time. And we can go back as far, I don't know how long back this far this goes, but this has kind of been like, you know, this is like the trend overall for the last going back to 2007 when this ETF was created on the dollar, right? If we actually look at the dollar itself, let's see here.
This is so interesting. I never do this. It's one reason why I find it so interesting. Whoa, hello there. That just spiked right there.
I'm gonna go back to.
That is a little scary. Down, 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 up. What are we looking at right now?
Well, I don't think this is the right. No, let me look up the other ticker symbol. Hold on a second. This is not it. That's not it. Give me a sec. You're putting me on the spot here with currency trading, which I don't do. So I have to go find. I have to go find which box I have it hidden under.
I just wanted to know what U.S. to China. That's all I really wanted to know.
What about what and what?
Not U.S. to China.
What about it?
I just wanted to compare it. I want to see how it's doing.
Oh, I don't even know what the ticker symbol is for the Chinese yuan is, my dear. I'm not a Forex person, so I couldn't even tell you.
That's no problem. I'm not asking you to be. So thank you for setting us up the comfort zone and showing us at least how to find that much, which is fantastic.
Yeah, I am not a Forex guru.
That's okay. Don't worry about it. Let's go ahead and get you out of there. That's no problem. So Jamie, you had a question a minute ago. Do you remember what it was?
Jacob, I just wanted to piggyback on the discussion that we're having right now, because I actually, you know, I do not financial planning, but I mostly recommend mutual funds. I don't really deal with stocks myself. I mean, not even personally, but for my clients, I really, you know, do mutual funds. I know a lot of people like them, some people don't like them. But I just wanted to share with you, can I share my screen?
Sure.
Okay,
Yeah.
cool. Because the thing is, usually when I talk to people, like people get excited about 9 to 12% returns, right? Long term, right? And I'm referring to planning for retirement and stuff like that. And I just wanted to share that, you know, because of some discussions we've been having, I just want to share with you, there are some funds that here's a fund that's 50% of this fund is invested in gold and precious metals. So I just wanted to share the return from April 1st to now, right? It's 54%, which is, you know, if I go back to, you know, last year to date. So I just want to tell you guys, I'm not showing you names. I'm just showing you numbers. So I'm keeping my the privacy of my client here. So 52% returns. So I started like, you guys started talking about gold, and I started like recommending to a lot of my clients to take advantage of what's going on right now, paying attention to this closely. So I have a lot of my clients that actually have, you know, jumped on that opportunity. I've seen some returns that are, number one, I don't ever talk about anything that's beyond 12%. You know, I talk about, you know, that's like max 9 to 12% is what I talk about. But yeah, so gold's pretty hot. I just wanted to add to the discussion. That's a Franklin Templeton gold and precious metals.
Is there a reason why you don't talk about above 12% returns?
No, well, no, because I think a lot of the funds that I offer, when I look at the long-term returns, like 20, 30 years, 40 years, 50 years, I mean, the average is always 11 and change, right? So that's like a long-term. So, you know, this is kind of like something that's spiking right now, and it's really cool. So a lot of my clients are taking advantage of what's going on. But yeah, now long-term, that's why I always refer to someone that's investing long-term. I always talk about 9 to 12%. So when I talk to some of my clients about 50%, I mean, they get pretty excited. So we don't know. I mean, I personally don't know how long gold is going to be a hot thing, but you know, it's been a hot thing so far. So it's cool that some of my clients have taken advantage of that.
Well, they're very smart to do so.
Yeah. So, you know, again, Franklin Templeton gold, or, you know, talk to me.
Did you enjoy doing your flying the other day?
Oh yeah, that was pretty cool.
Did you finally get the license? I know you did. We talked about
Yeah,
this.
I'm getting my license.
Have it now?
I'm doing my hours. Yeah, I just went yesterday again. So
Congratulations. That's so exciting. I love that.
thank you. Always wanted to
So,
do that. Yes.
This is something that's interesting because my ex was a financial planner, and we were learning so much about real estate and building wealth that went against what he had learned with the CFP. Not that it was wrong, but because it was a different way of controlling your own money, and because he was CFP, he made money under assets under management, even though he was a fee-based structure. When he first started, it was commission-based and was fee-based, so on and so forth. But anyway, the industry has been changing. He worked for some big companies. But anyway, moving on. One of the things that was interesting was one of the ways I like to work with other financial planners is show them how you can actually work with your clients in real estate and actually acquire more assets under management, getting them into real estate as well, but they have different returns and higher returns, depending on what they need. Do they need a cash flow strategy? Are they trying to do more passive? Or they need to park money for long-term as a portfolio strategy without going into REITs, without having any control, but more direct, quicker exit entrance, stuff like that. So when we were looking at mobile homes, for example, as people at that point in our life, our friends were trying to get cash flow strategies primarily. So we were able to look at mobile homes specifically. Now they are, please keep in mind what I'm about to say is purely cash flow. Okay, I want you guys to understand it's a cash flow strategy. Great way to build wealth, not something I want you to do forever, but getting into the actual trailer themselves, what we would do is if one of our investors were to buy a mobile home, they could buy them for like, we did our first for like 18,000, and they were getting $500 a month in cash flow. Not bad, right? So it turned out to be quite heavy. Let me see if I remember where it came. On average, all of our returns were roughly between 20 and 24%. But because they weren't insured, he couldn't sell them, and I totally got that. It didn't mean that the math was lying. It doesn't mean the deals weren't real. It didn't mean the notes weren't real. It just wasn't what he could sell because he was only bonded and insured for certain products because of his licensing. So when you guys are talking to your financial planners and other professionals like that, realize that they know what they're doing, some of them, not all. Just like any other doctor, there are smart doctors, dumb doctors, dentists, dancers, so on and so forth, investors. Just find out their quality, but remember, they can only tell you what they know to be true because they could lose their license and therefore their practice. If they misrepresent themselves, they can't practice anymore, well, guess what? They've got other clients who are also going to be hurt. But it's very important that you know how to vet your financial planners so you can actually have intelligent conversations. I do believe that at some point, the goal is to have so much wealth in your pocket that you need help managing it. So that's where they are very helpful to know you need to get to that point. There are some firms that will let you start investing with as little as $5,000. My opinion is that that's all you have. You don't have much to lose then. So go ahead and start using it to create wealth through like doing transactional funding for wholesaling deals, or going and partnering on flips for mobile homes, or using it to just joint venture in other aspects. There are so many ways you can go about doing it. So that's just an idea. I think Emily's coming back, but I'm not sure. Okay, so the next part of this that we were going to try to do today
I'm here.
was, welcome back, honey. Do you have anything you want to add to that? Because you
Nope.
do talk about mutual funds a little bit.
Well, a lot of, so when you think about the different vehicles that are out there to invest, mutual funds are obviously one of them. You have ETFs, and then you have individual stocks, and so on and so forth. When you look at the different baskets, one of the most people in their retirement accounts are going to have mutual funds with your employer. But over time, and just looking at mutual funds, you know, they're one of the, when it comes to management fees, they're one of the ones that really have high management fees in terms of what they charge for them to manage those funds. Not all of them are, but the average, you know, fee for a mutual fund is usually typically around 6%, 6.5%. ETFs, which are exactly the same as mutual funds, have lesser fees, and they're usually right about 0.5 or something like that. I'm not 100% sure, but again, it's just an average number. There are some that are low cost, there are some that are high cost. It's just an average number. So mutual funds, ETFs, you know, it's whatever the individual wants to invest in, as long as they understand what they're investing in and understanding what the fees are to actually have those funds managed. But it just goes back again to being educated and understanding that even though you're in a basket of stocks and that basket, whether it's an ETF or a mutual fund, is diversified within itself, there's never an issue when the market's going up. It's always the issue when the market is going down. So it's always being able to know how to protect whatever investment vehicle you're in when these market conditions change. And that's where a lot of people get left behind the 8 ball, is because yes, when the markets are good, everybody makes money. It doesn't matter whether you have a mutual fund, an ETF, an individual stock, your return will be different based on what, what you're paying in the management of those fees. So obviously the stock investor will make the most in returns because they're actually owning the individual stock itself. So they make 100% appreciation versus the person owning the ETF and versus the person owning the mutual fund. So those returns will be different. They're not going to be identical. And also the same thing goes for the drops, but the individual investor or the person who invests in ETFs and stocks, and then also understands how to protect their account when these market conditions change, or at least knows, when, to look and see when is it time for me to, either close out and go to cash or whatever. As long as you have a plan on what to do when these conditions change, that's what's more important. Whatever basket you choose, understand what basket you're in. Whatever vehicle you choose, know what vehicle you're in. It's as if we're all, the way I compare mutual funds, ETFs, and stocks, it's we're all driving a vehicle going to the same destination. But maybe if we were to compare the mutual fund being like, it's the 1975, Volkswagen, buggy or whatever. And then you have somebody driving a Toyota, Camry, and that's the ETF. And then you have the Ferrari and so on and so forth. So it's 3 different vehicles. One's just, less fuel efficient than the other, but they're still going to get you to the destination that you're looking to go to. Just understand that, what vehicle you're in and what the outcome of that vehicle is. That's the only thing that I can say about that. But whatever the individual investor wants to invest in, it's absolutely the choice. Just understand what you are invested in.
Well said. So on that note, does anybody have any deals they like to review? We got some smart people in the room. We can figure stuff out. What deals or questions you guys have currently?
Jacob, you mean like in real estate or
Well, that's what I'm good at.
Part of this conversation.
Questions you can ask them to see what we can come up with. Emily's a stock girl, and
Oh, regarding
obviously a
stocks,
stripper
okay.
at the Gentlemen's Club. What questions do you have? Jamie, did you have a question you want to ask about a deal?
Oh, no.
No?
I mean, I
Very short call for
did a
you.
lot of questions, but regarding, these options, but I think you mean questions about stocks, right? And mutual funds.
No, it can be real estate, it can be stock. So on Fridays, we're going to be doing now is having our stock market update. We're going to have a Q&A. So we're going to try to get people engaged because we had questions for it. So what is it you have a question about lease options?
I have a question. So look, regarding these options, when I come across a property that's being sold by for sale by owner, and I approach the seller, I basically do a little script where I focus and I say I buy properties one of 2 ways, either cash for a significant discount or on terms, and so I assess the seller's motivation. Now, when I come across a property that, for example, is where the seller is late on their payments, right? And they're, let's say they're 3 to 4 to 6 months behind on the mortgage payments. How am I structuring that deal? Have you ever done a deal like that? Has anyone ever done a deal like that? Mm-hmm. And how am I structuring that deal in terms of, finding the time between me locking that in with the seller and then having time to find the tenant buyer?
So first and foremost, you're asking 3 different questions. So let's go ahead and hit them one at a time. The easiest one is tenant buyer. You want to find that first. Stop looking for properties.
Okay.
Everyone stop looking for properties. Screw finding houses. There are houses everywhere. That's not going to make you anything. Real estate is not about the houses or the properties. Screw it. It's about finding a problem and offering a solution. So you want to find the people, right? Find the people involved. If you want to do lease options, they are just another acquisition strategy and another exit strategy. They are not something you need to go and try to find. There is no such thing as a wholesaler. There is no such thing as a lease option specialist. There is no such thing as a flipper. What there is such thing as is a real estate investor. That's the reality. You're a real estate investor who happens to know your craft. So when people tell me they're a wholesaler, I just want to smack them. Or I'm going to focus on lease options. Well, whoopty freaking who? No, you need to focus on finding problems and offering solutions. So when you're trying to gauge the motivation of the seller, you went through different places. We're going to start with that one now. By the way, you want to have a tenant buyer campaign set up that's already marketing, so you know who's looking where and what their situations are, and get them fixed even before you have a home for them. So that's going to start generating business for you anyway and building reputation for you anyway. So you're building that tenant buyer funnel now, okay? Then you find out where they're looking, and that's going to tell you what properties to look for in what markets. Otherwise, you're just throwing a big wide net and hoping you catch something. You'll catch a couple of fish, yes, but you're also going to get a lot of plastic in that trash. So you want to make sure you know where you're putting your marketing and why. So when you're going and you're talking to a homeowner that is delinquent on the mortgage, now they have motivation. Doesn't matter if it's a lease option. Who cares? You have a problem to solve. You can solve it one of four ways: putting it under contract and selling it, taking it over on payments, which is a form of lease options, a wrap mortgage, which is another form of seller financing, to take it and rent it out, or you could flip it and do an equity split on the back end if you so chose. There are so many ways to do it, but it doesn't matter. You don't know what to do with that property until you get in front of the homeowner. So understanding that this is just an example and it's all speculative, let's talk about what that looks like. Oh crap, I'm gonna have to erase my dry erase board, aren't I? Yep. Okay, Elise, well, Derek.
Yeah.
Would you get a piece of paper towel and erase that board? So I can actually start writing this. Will make sense that way. Boom, boom, boom. Picture, so I have it for later. Lots to do. Okay. I'm going to write this out so you guys see where this is going on. There are going to be between 800,000 to 1.7 million foreclosures coming down the line. Now, I do expect there to be some sort of government intervention to actually stop the amount of foreclosures coming on, but still there can be a lot of properties in forbearance. And until the government takes things over, when it gets bad enough, then we are just going to have to continue to adjust and adapt with the market so we can take advantage of the opportunities and help as many people as we can. So when you're talking about people being behind on their payments, it is usually because there are life events that have come up that have now prevented them from making their payment, because no one doesn't want to pay their mortgage. Why is that? Because it's their home. That's where people feel secure. That's where they feel they got something moving on. So Jamie, let's talk about your specific market. How much is the average mortgage payment where you are?
1,900 to 2,300.
1900. Let's make it 2,000 for my simple little brain, okay?
Okay.
So, how many months do you want to, in this example, that they're behind? Choose between 1 to 3.
3.
And why are we choosing 1 to 3? Anybody? Why am I giving the options between 1 and 3 months?
3, so that the bank can do something with it.
This because in 3 months, after 3 missed payments, the bank can actually officially start the foreclosure process.
Mm-hmm.
So until then, they are actually in what's called, it's not really called pre-foreclosure, but they are in the foreclosure, they're in the foreclosure cycle. So foreclosures have 3 parts to it. All right, it's called the foreclosure triangle. The first part, this is pre-foreclosure, okay? This is between 1 and 3 months we have missed payments. The bank starts to call you, hey, I'm sorry, maybe something got missed in the mail. We did not get your payment this month. Call us back and just work something out. Month 2 comes, hey, we still haven't got your payment. Now we have some late fees. Please give us a call back. Month 3, hey, you're really getting behind now. It's starting to stack up. We need you to call us back. And at this point, people are now so stressed they don't have the money. They couldn't afford the $2,000 from month 1. Now it's $6,000 plus late fees, attorney fees, all sorts of nonsense, right? So that's called the pre-foreclosure the pre-foreclosure process, okay? So pre-foreclosure. Up here is where you actually have the foreclosure process. Now the foreclosure process itself is its own magical beast. But the foreclosure process means that officially you have Liz pendants has been filed against it. So Liz pendants means legal action pending. Okay? Liz pendants. It looks like rendants, but who cares? But that's Liz pendants. On this side of it, after the foreclosure process goes on, the bank is trying to work something out with you, and they're trying to either get you to do a forbearance, which most people are already in, a loan restructuring, or they're going to go ahead with the legal proceedings and foreclose the property and take back the asset, which they have ownership rights in because of the mortgage. I'm going really quickly right now, but we are going to have a foreclosure training coming up soon. Now, after the foreclosure process, the next part is your REO, or sometimes also called OREO, other real estate owned. REOs are just means that they're owned by the bank and they're going to make them available and put them back on the market. Okay, so after the gavel falls, these properties get back on the market and they are owned by the courts, by the banks. All right, so that's what you're looking for there at the REOs. This is what you see a lot of on the MLS. Okay, now they used to be deals, now they're not. Blanket statement. So when you see people talk about getting an REO foreclosure from the bank, that means they haven't done crap in the past 5 years. They don't realize that that was the strategy we did 10 years ago. Remember, real estate is cyclical. What was good then is not good now. What's good now wouldn't have been good then. All right, so I want you to be aware every 20 years, the market changes. 20 years ago, we were in a bubble and it was busting, just like it is now. Keep that in mind. Now, we have this going on. This is the foreclosure triangle. When you want to do a lease option, that is what you can do here to stop the bleeding, okay? So in this case right here, what we've looked at in Jamie's example is this is your house. You see me? Okay. So this is the house. It's a nice house. It's happy. It's got pretty like windows and it's got shrubs and it's smiling at you. It's a pretty house, okay? It just happens to have the owners were laid off during COVID. And now they can't afford their payment and they didn't know how to reach out for help. All of their family is now out of work too because of COVID or some other global pandemic. And now they are struggling, they have no help. So at this point, these poor homeowners are trying to figure out how they can get caught up. Every month, they're getting bombarded by the bank, telling them that they need to get paid, telling them that they owe more and more money. There are late fees involved and legal fees, but we're going to help you out. You have to work with us, and you'll get caught up if you pay us the $6,000 in legal fees. We won't kick you out of the house. We won't foreclose on you. So at this point, remember, they are paying $2,000 a month. At that point, they are also now 3 months behind, which means they're $6,000 behind in arrears. Now they also have legal fees. So with this, they are really, really struggling because they can't afford that and they're about to lose their home. Two things you want to look at. This property, is it going up or down in value? Most of them are going up right now. Clearly, why would we invest in an asset that's losing value unless we want to force appreciate? Let's assume that it's going up in value for the sake of this example. All right, so we have a property that's going up in value, which means the homeowners are gaining equity in their home. One of the best ways to help them, it's not about the property. I don't care about this. I care about Sam and Anita. Don't know, came into my mind. All right, so I care about them. What's best for them? And where are they in this triangle? Okay, do not give a damn about the property. Let if Sam and Anita have equity in this property and they can use that equity to pay off that $6,000, that's called a restructuring. They can ask the bank to restructure their mortgage. And sometimes they will do that. I always go into my foreclosures trying to help the homeowner out first. So then when I can't help them out, they're on the phone, they hear me talking to their banker, they actually sign over power of attorney so I can actually talk to the bank on their behalf to try to work something out. If they know I'm doing that and we can't help them and they still have their month 3 and they're about to get their home foreclosed on and lose everything, all of the equity in that home, then I can go in and say, well, tell you what, I have another idea. Let's talk about this. Currently, Jamie, how much is the average price home in your market?
350.
350?
Yes.
All right. So we have a home that's worth 350. Let's say Sam and Anita have owned this home for a period of time. We'll say they've owned it for 5 years. They bought it for probably $300,000. Okay? It's worth 350. Now, we work from home, I've got dogs. They bought it for roughly, we'll say 290. Okay? So they have a 290 mortgage, of which they only now owe 270 because they've had it for 5 years. So 270. That gives you how much equity in the property? What's the difference between this and this?
70. I mean 80,000.
70,000.
80.
70, that's right. Yeah, 80,000. $80,000. There's $80,000 worth of equity in this home. It's happy now, okay? $80,000 of equity. If they could not get the forbearance because they weren't employed, therefore it's now risky for them to refinance because they don't match the criteria for the bank for them to actually pay the mortgage now. Now they're screwed, and we know that. I know that they're good for it because the property is going up in value. It already has $80,000 of equity in the deal. Are you following me so far?
Yep.
Yes? So I'm going to come in as a solution provider, not as a landlord. And I'm going to say, hey, Sam and Anita, tell you what, I know you're having a hard time right now. You owe $6,000 plus legal fees. I'm going to come in and I'm going to take care of that for you. I'm going to go ahead and I'm going to take care of your late payments and your legal fees, and that's fine. I'm also going to give you a couple $1,000 put into your pocket to help you move as moving expenses. So I'm going to use an easy number because I'm a dancer, and I'm going to say $10,000 total. Thank you. So I'm going to give them $10,000. What they're going to do in turn is they are going to they're going to put the home into a trust. And we're going to do a wrap mortgage, which most people don't know about. Do not even try to do this if you don't know how to do it correctly, because it will be illegal if you miss something in the long run. But they are legal when done correctly. So I'm going to put them in a wrap mortgage, which means I'm going to take over your payments, Sam and Anita. I will take care of the $2,000 a month payment for you, so you don't have to worry about it. I'm going to pay your legal fees and your back payments, so you don't have to worry about anymore. You're going to get a little bit of extra money in your pocket so you can go and move on and rebuild your life. Now, what's the average rent in your market there, Senor? Jamie?
For a house like that, 2,300, 2,400.
So we already know from his example, how much is, with the mortgage is $2,000 and the rent is 23, how much is the spread?
300.
Ooh, 300. So we get $300 a month. What's 300 times 12?
3,600.
That is $3,600 annually when we rent it out.
Mm-hmm.
Passive income. Did I have to get a mortgage for this?
No.
There was already one there. I just use it as a wrap, right? I'm taking over the payments. Am I controlling the property? Yes. Do I have equitable interest in the property? Who does this belong to?
That belongs to them. I mean, the equity? No, the equity belongs to me now.
Depends on how you structure the deal, right? Because I could do it and get 3,600, but Sam and Anita actually have worked their ass off to get that. So what I would do is what's called an equity split with them. So when I sell this property, or if I flip it, if I hold it and do a sandwich lease option, doesn't matter. I'm going to split part of this profit with Sam and Anita as well. Okay? Why? Because this is how I like to do business. I wasn't trying to take advantage of them. That's not my deal. It's not my bag, yo. So let's say we do this deal for 5 years. What's 36 times 5? Class? 36 times 5. Am I teaching to myself? I already know the information. What are you guys doing? Participate.
10,000.
All of you with your screens up except for Leanne and Jamie. What are we saying?
Wait, no. Hold on a second. Let me do it.
Thank you, Leanne. I know some people would say something.
Okay, 18,000. Okay.
$18,000. Okay, that's how much I'm going to make off this property in 5 years just from the cash flow. Okay, that's profit center number one. When I sell the property, is the property in 5 years from now is going to be higher or lower than 350?
Higher.
How much higher?
That's on the depreciation rate.
Let's say it's going to be 370 to be conservative, right? So we have 370. That's an additional $20,000, correct? Now I have ownership of that $20,000 because I took on that risk for those 5 years. Make sense?
Yes.
I took on that risk, therefore I'm getting that portion of the equity. There's a total of $100,000 in there, right? But I'm getting the $20,000 because I took on that risk, okay? So over here we've got $18,000 for the cash flow. We're getting the $20,000 from our equity. And we're going to split the $80,000 with them. Am I going to be greedy? No. What I am going to do is I'm going to take out what I put in. So I'm going to get my money back. Yay. I got my money back for fixing everything and getting them out of the house and helping them rebuild their life and restructuring. So now there's $70,000 left. I divide that by 2 to get my fair share. That's $3,500. Following me?
Yes.
That's the equity split portion. So on this one property that I'm going in on, that I'm solving their problem on, I do not care about the house. My primary concern is Sam and Anita here, okay? It is the house that is allowing me the opportunity to fix their problem. It is not the house itself. It's my knowledge with the asset class. So now if I do this together, I add the cash flow, my equity gain, getting my capital back, because I literally have no money in the deal, and I get the $35,000 from my half of the equity split, right? I'm going to walk away with, that's an 8, 13, 2, 4, 5, 6, 7, 8. I made $83,000 in this transaction without any of my own money, any of my own credit. Got it? How you present this is key, guys. It's not about how much money you have. I mean, who's going to complain about this? You literally get all your money back in the deal. You're getting all of this because of your knowledge. Yeah, you got to put a renter or tenant buyer in there. Yeah, you got to take on the risk. Guess what? You're getting paid for it. There's no such thing as free money. You got to work, okay? But because I'm making $83,000 in this, and I'm making $18,000, $3,600 a year, how many of your bills, think about this, $3,600 for me would cover my rent, my living expenses, my cell phone, and my car, actually. Not bad for me, right? Now that would be, if that were monthly, so I gotta work that out. I gotta get 12 of these. But if I were doing $1,800 a month, guess what? That's not too bad. It's gonna cover some of my utilities and make things work. You do multiple of these, that's where you get the actual value. Now, to answer your question more succinctly there, Jamie, if you're trying to go and say, I'm gonna buy houses on cash or terms, and you're talking to a distressed homeowner, you have got to work on your presentation. Because what most people do not do is they forget that they're dealing with people. And they go straight to the house.
Gotcha.
To Sam and Anita, this isn't a house. This is their home. They're sad, they're grieving, they're depressed, they're angry, they're frustrated. And this is usually the last domino to fall in a series of unfortunate events. Going to those individuals with sensitivity and being human is absolutely essential. I do not tell anybody I buy houses cash or terms. That sounds like such professional bullshit. It really does. I go, okay, so tell me what's the problem that we need to solve? Where are you having difficulty right now with your home? Let me see how I can help you. Okay, now that's if I'm dealing with probate, foreclosure, something like that, something that is sensitive. If I'm dealing with a distressed property that grandma left to her kids 15 years ago and it's falling apart, I'm like, okay, this is no longer a home, it's a house. All right, different strategy, different approach. But for distressed buyers, you remember it's a home, okay? When I go in there, I'm okay, well, what's the problem? They tell me the problem. Okay, well, let me see how I can solve this. Let's try to keep you in your home. That's my number one goal. I want to keep you in your home. And if we can't keep you in your home, then let's talk about what your other options are, okay? Now let's go through your avenues. Are you open to having discussions, like honest discussions with me about your situation so I can see how I can help you? Yes or no? What would they say, Jamie?
Yes.
There you go. I got their permission to talk about something very painful, and they will open up. They will tell you everything. It is incredible. And they just want to, because for them, it's cathartic, it's therapeutic. Someone's actually there to help them. That's not a big box bank that's trying to beat them down, making them feel guilty, having all these late payments and lawyers are calling them, right? It's someone coming in like, hey, I can stop your phone ringing. Let me get some information from you, right? So is it always easy? No. But is it often easier than you think it's going to be? Sometimes. Is it rewarding? Incredibly. So when you say you want to learn about lease options, don't learn about lease options. Learn how to utilize lease options as part of your acquisition and disposition strategies. Does that make sense?
That makes sense.
Something I really want to, I hope people take and they see what's going on. I've got to get better at displaying these on dry erase boards. I did this last night too. I am awful with this part. This is how my brain works. Thank you so much. Go ahead, Jamie.
So once you do that, Jacob, first of all, I want to say thank you because you completely shifted my mindset around like how to approach it. And it's completely different perspective on, what I've been learning and the stuff that I've been listening to. So the thing is, once you do that, right, how do you structure then? Can you structure this in a way so that the tenant buyer that you're helping, with the lease option consideration, you cover the 10,000 that you?
Why would I put lease option consideration when I'm already putting this in there? And Leanne, to answer your question, the reason why it's 35,000 equity, not 40,000, because I took out my 10,000 that I put into the deal, right? From the 80,000 that was started.
That was out of pocket though, the 10,000, right?
Yeah, I took out the 10,000, so that's 70, because that was my cost.
Right.
Right? I'm getting my consideration back. And so what's left is $70,000. 80 minus 10 is 70. Divide that by 2, that's my 35,000.
Yeah, but
Now,
what
you don't even do that. Some people don't even do that.
But what I mean is on the front end, Jacob, can you get the tenant buyer to actually be the one to put the money down instead of you?
So that's involving another party that I did not bring in here.
Gotcha. That's what I was, yeah. Okay.
In this situation, dealing with a distressed home because they're about to lose it, right? They're losing their home to foreclosure. I came in, my consideration was catching up their back payments than their legal fees and giving them money to move out of the house. It was still $10,000. That's plenty in this example.
Mm.
Like, why am I going to do more? Because now I'm also taking on the risk of their home.
Okay.
Follow me?
Mm-hmm.
There are so many ways to go about structuring this. And honestly, what I like to do to make this better, if I'm going to do 50% of the equity on the back end, I actually give them a little bit of the cash flow during the year. Therefore, it helps them be back on their feet. There's so many things you can do. So I would split this $300 a month, and I would probably take 200, give them 100, right? Just because when I say I want to help you, I mean I want to help you, right? That's just me though. You don't have to do that, but it does create goodwill amongst you guys. It's up to you how you want to do business. And I will change it based on I'll be flexible based on who I'm working with. Some people I want to be nicer to because they are good to me. Some people I won't because they're making my life challenging. Okay. It's all based on what the energy you give, the energy you get in my business. So if I were to do a sandwich lease option with this, the person buying it, first and foremost, that's a separate board. Okay. That is a separate marketing strategy. It's a different part of the transaction. It's different dialogue. But the overall theory is, yes, they would give me money. I need them to put down money to be a part of the program. I had to be very careful that's a licensed agent, by the way. So it's something very different. But if you're not licensed, and same thing with you as a financial planner, you have to make sure you're very, very careful with your licensing. But if you're not licensed with anything, yes, they can put down something to show they're serious about being part of your program. $200,000, $500,000, something like that. That gets them on your VIP list. Okay. Now from that, when we find a property that meets their criteria, 3-bed, 2-bath in this school district, then they would have to put down $9,000 additional. Or in this case, if it's $270,000, it's worth $350,000, I'm going to have them put down about 7% of that. Jamie, what 7% is 35 of 350?
Hold on a second. Someone's going to get in. It's 24,500.
24,500. So, because in this area, next to middle class area, so I have to have $24,500. So I'm going to go ahead and get rid of this so we see what's going on. $24,500. Guess what? Who gets that money? It's paid to me, right?
Yep.
This is the tenant buyer's option consideration. Okay, that's their option money. From here, they are going to pay higher than average rent prices. Not that you have to, but that's what we typically do for lease option because you let them, they're acting as the homeowner. You want them to pay more than fair market rent because when they go to just slightly more, don't be crazy. But when they go to actually purchase the property in 5 years, 3 years, whatever your term is, the underwriter will look at it as a purchase money or mortgage versus a new money. It'll look more like a refinance versus a new note, I should say. I didn't say that right. So it would look at it, Leanne, it'll look at more as oh, they're already living in the house, they already like the house, they're already paying more than they would if they had a mortgage, which means they can afford it. Does that make sense? Yeah. So it gives a flavor of a refinance over a purchase money mortgage from the underwriter's perspective. So if the average rental is $2,300, we're gonna make it $2,450, all right? So at $2,450, what is $2,450 times 12? Anyone? Bueller? Bueller? You two are over here. Why don't you have your calculators out, goddammit? You're right here. Jesus Christ. Making me do all the work. Come on. What is it? 2450 times 12. 12. 29.4. Jesus Christ. 29.4. Okay. 29,400. 29,400, yes?
Yes.
So, option consideration, this is year one cash, year one profit for this. $53,900. You like that, right?
Yeah.
Did that more than cover my $10,000 that I put down?
Yes.
Yeah? Perfect. So I got that back in my pocket. Awesome. Plus room to spare. What's 29,400, Derek, times 5?
1,500 times 5. What?
29,400.
147.
9,400 times 5. 147.
You make $147,000 on cash flow on rent from this property. I lied. I forgot something pretty important. I forgot to take out the mortgage payment. Do 2,000 times 12 times 5.
2,000 times 12 times 5. 120.
$27,000. I thought I was missing something. Okay, so I'm still making $27,000, which is still more than the $7,000 more than just the traditional cash flow, right? was like, that's a large thing there. So but I also have $24,500 in the option consideration, which I would actually credit to the tenant buyers when they bought the home towards their down payment. So if you had to find, because a lot of new first-time home buyers, they've got to put down anywhere between 3.5% to 5%. They've already put down 7%. I'm going to give them their 7%. Why? Because it makes it look to the underwriter that they can afford it already. Awesome. They're walking with instant equity. They'll still probably put down 3.5%, which means they're going to walk in with 10.5% of equity. That's an awesome thing to do. And they're going to tell all their friends and family about you. They're going to spread word of mouth. They're going to actually be a solution solver for so many individuals. You got to do it right. There's a lot of paperwork here that has to be recorded properly. There's verbiage you need to make sure you're putting in correctly. It's all state specific. Do not think that just because we did one example that you can go out and do a lease option and do it correctly. But the power of the knowledge is what you should be taking away. Okay?
Got it.
Liz, Hector, do you guys have any questions? Jackie, do you have any questions?
Thank you, Jacob.
My pleasure, Jamie. Was this helpful?
Huge, man. Yeah,
Thank you. Investor Party.
thanks.
Jackie, I actually wanted to congratulate you. Are you there? Can you hear me?
Hi, yeah, I can hear you.
Hi, gorgeous. How are you?
Good, how are you doing?
Fabulous. Of course, Hector and Liz, of course you're following fine. You're smart people. So, Jackie, I'm going to brag about you. May I?
Sure.
Like, I don't know why. So for those of you who don't know, the people that come on the calls are actually my friends, right? So when you guys reach out to them, they call me and I'm like, oh, this is so cool because we're a community, right? And Jackie did something I'm so proud of. She was working on a wholesale transaction that did not pan out, thankfully, right?
Yeah,
You want to talk about it? Tell us what the deal was.
sure. So this home was built in 1950. It was one of the oldest homes that I saw, but it was in a very high-end neighborhood. It was like really out of place, this home, for where its location was. But we got it in a contract for as low as the asking, as low as we could from the owner. And I reached out to a couple people for some comps because it was really hard to find similar ones. And what had happened was actually this is a demo rebuild, because what the basement was just like, the height was so low and the top level, it was so low too. So the numbers didn't work out at all from what I originally thought initially. So that was like a great experience to learn actually seeing that home, yeah, and the state that it's in, because it actually had to be completely demoed and then rebuilt back up to the 700 ones. So the numbers initially didn't work because we got it under 325 first, thinking that we can use the 5 bedrooms as they were now, but yeah.
You're thinking of a remodel, not a demo.
Right.
Big difference.
Yeah.
So this
I'm
is what
short. So like when I was in the top floor, I was like, oh, this is fine for me. But like the standards now, it's like so much more higher. I was like, oh, those little difference in like that foot, yeah, makes a difference.
Hey, well, in 1950, people were slightly shorter, right? So let's talk about what you did so well here. 1, you looked for a property. 2, you asked for comps. They didn't come in time, but you asked for them. 3, you put it under contract. Great. Did the numbers work? No. But how much did you learn from that transaction?
Big time. The experience was super valuable.
Sometimes the best deals you get are the ones you don't take.
Mm-hmm.
Right? Just by taking the action steps of going through the process, you're already further ahead, where everyone else is scared to actually do something. That's huge. I am so glad you had that experience. It's going to make you a kick-ass investor. So I want to give you massive kudos. That was awesome. Okay?
Thank you.
So next time, you have a little more knowledge, right? So when you go in, you're going to run your numbers differently. Cool. You know what? You might still screw that one up too.
Right. But we got
Okay.
exit clauses. Yeah. So
Exactly.
fine.
So now keep going. There's no reason to stop. No reason to stop. Now it's time to amp up. So congratulations.
That was even more motivating because I was like, oh wow, I got a really hot lead with this list. So it's awesome.
Which list was it?
It was probate.
I love probate leads. Love
Yeah,
probate.
good.
We're actually going to be talking about different marketing styles coming up in Real Estate Survivor next week. So it's going to be kind of fun. So get ready for that. Okay, so we're going to let you guys start going because I know I talked more than I was expecting to, but I wanted you guys, I wanted to answer Jamie's question about the deal. Couple things I want you guys to know. Next week, we are going to be having on, Cautious coming back on from IRA Club, talking about how you can use your IRA to invest in stocks as a self-directed IRA, as well as some of the differences that have now come out because of the stimulus package, PPP, EIDL, different things you can do with your retirement accounts that you can utilize, but how to use them when you're investing in stocks, I have no idea. I know how to use them in real estate though, so keep that in mind. She's coming in Monday. We're also going to be having, Frank and Sherry are coming on. I don't know if it's Wednesday or Friday right now, but talking about what Kate's House has done and how they've been growing their business and expanding their business model and what they're doing with, it's incredible what they've done. It's really very incredible. And I'm so glad to be a part of their network. If you guys have anybody you think we should bring on and that you think would be interesting that could contribute to our conversations, let me know. I would love to interview them, love to see what's going on, keep this going, keep the party rolling. And if you've got any questions or ideas or feedback, please let me know. Put in the comments below, put in the chat box, send me an email, put it on investorparty@investorparty.com. Whatever you got to do, let me know. We are definitely open for any feedback so we can make this better for you guys. And that's pretty much it. Am I forgetting anything for next week, Elise?
I don't think so. Just invite people who might be interested in stocks.
Yes, if you know anybody who's interested in Stock Market Survivor, you can go to stockmarketsurvivor.com, stockmarketsurvivor.com. Thank you, Jamie. And you can actually sign up there. If you've got friends who want to learn how to trade, Emily's going to be teaching that course. Head on over there. They can fill out the interest form, and we'll send them an application so they can apply to be part of the party. So that's coming up now. So go to stockmarketsurvivor.com. Tell your friends and family. We're trying to cap it at 10. I might do 15 if I get one other person involved to teach. So not very big. It's more about one-on-one coaching, teaching you from nothing how to start trading stocks. Only stocks for 2 months. And then it's going to go into options after that, but just stocks. Paper trading, fun things. Guys, thank you for being part of our mission to end homelessness. I'm so glad you're part of us. So share the word, share the video. I will talk to you later. Be blessed. Bye-bye.